Shares explained in 5 minutes. How people make money from stocks. What if I told you that you could own a piece of companies like Apple, Tesla, or a Coca-Cola and get paid when they grow? That's exactly what shares are. But here's the problem. Most people hear the word shares or stocks and immediately think it's complicated, risky, or only for rich people. In this video, I'm going to explain what shares are, how they work, and how people actually make money from them in the simplest way possible. Let's break it down. Section 1. What are shares? Imagine your friend starts a business. Let's say the business is worth $10,000. Instead of owning the entire business alone, your friend decides to divide it into 10,000 small pieces. Each piece represents ownership in the business. These pieces are called shares. So if you buy 100 shares, you now own a small portion of that company. That means if the company grows, your shares become more valuable. If the company makes profits, you may receive part of those profits. This is exactly how big companies raise money from investors. They sell shares to the public through the stock market. Section 2. What do you buy shares? Shares are bought and sold on something called the stock market. Think of it like a supermarket for company ownership. Investors from all over the world come to buy and sell shares every day. Some of the largest stock markets include New York Stock Exchange, NASDAQ, London Stock Exchange, and thanks to modern technology, you don't need millions to participate. Today, with investment apps and brokers, anyone can start investing with small amounts of money. Section 3. How do people make money from shares? There are two main ways investors make money from shares. 1. Price increase, capital gains. Let's say you buy a share for $10. A few months later, the company grows and the share price rises to $20. If you sell it at that point, you make $10 profit per share. This is called a capital gain. Many investors focus on buying strong companies and holding them as their value grows over time. 2. Dividends. Some companies share part of their profits with investors. These payments are called dividends. For example, if you own 1,000 shares and the company pays 50 cents per share, you receive $500. And the best part? You can receive dividends even if you don't sell your shares. This is why many investors love dividend stocks. They create passive income. Section 4. Why do shares go up and down? Share prices change every day. Why? Because of supply and demand. If many people want to buy a company's shares, the price goes up. If many people want to sell them, the price goes down. Prices are also affected by company profits, economic news, new products, investor confidence. That's why the stock market can sometimes look like a roller coaster. But historically, over the long term, strong companies tend to grow in value. Section 5. Why investing in shares matters. Here's something many people don't realize. Keeping money only in savings accounts often means your money grows very slowly. But investing in shares allows your money to work for you. Many of the world's wealthiest people built their fortunes through investing. And you don't need to be a genius to start. You just need patience, consistency, and the willingness to learn. So, remember, shares simply mean owning a piece of a company. And when that company grows, your money can grow too. The earlier you start learning about investing, the more time your money has to compound. And that's how ordinary people build extraordinary wealth. If you enjoyed this video and want more simple finance explanations, make sure you subscribe to the channel. Because on this channel, we talk about money, investing, and leveling up your financial life. And I'll see you in the next video.